Hello, this is Amy from iTradeAIMS. Thank you for joining again. Today I'm going to show you what happened on the DAX this morning. It was a very interesting session. The market went crazy down, and then there was a point when it turned around. So let's have a look at it. Okay, so London opened over here, and I usually use my MT4 chart. So if I mark this one here for you, you will see how powerful this is. So as the market opens, what we saw was the market was highly volatile. Every candle is going 20, 30 points on M1 chart, but it doesn't matter. We can adjust our stop loss and lot size based on the ATM or the script that we use on MT4 charts. But for this video, I only want to show you the Elliott wave, the quick 10-second Elliott wave that we did, that I keep doing when I take trades. So I trade based on what I call the low bot method. Right at the open of London Open, I use the low bot strategy. It's a lesson 16 in the dashboard, if you remember. So price went up, and I'm looking at the levels to the left. At that time, this what I've written on this is not there, and the reason it's already there is because when I did that, I printed these lines and counted the waves. I shared it in my Discord channel. So obviously around this time it did not exist. So I was looking at the market and I'm thinking, okay, so we are in a box situation, and this is where what was going through my head was these 3 points, which I keep talking to people about, and it's this. Okay, so this is what was going through my head. So I say wait for a sideways range. I don't necessarily want to wait for it. It's not that I need it, but if it's happening, then I want to mark it. So that's exactly what was happening over here, right? Let's go through bar replay. Right, so over here it's like this, and you're thinking, all right, so how am I going to trade this? Now, if you lose discipline, you could go long here, short here, and all that kind of thing. And I've done it, and a lot of other people, my friends, have done it. It doesn't work. In the long run, you lose money on this. So what do you do here? Well, two things will happen. If it happens right at the London Open, that the market is actually moving, and then a London Open kind of stops it from moving. What was different today is that the market was high volatile. So I wrote in the chat room that if you see the market that it's range bound, but at the same time its high volatility is there. So that means volume is really high. Now we don't have volume data in MT4 platform, but that doesn't really matter because we've learned that you can actually assess from the candles the way they are and find the ATR of it, and you will know what's going on. So obviously the underlying market, which is the DAX, the 30 stocks, they are really crazily going up and down at certain levels. So volume must be high. If volume is not high, the stock market cannot have a high volatility. I mean, it can, but usually high volume, high volatility are kind of connected. So if the range is high, but it's still sideways, this means that there's a tug of war going on. Some of the stocks are going up, some of the stocks are going down, and there's a huge exchange going on. And this usually indicates that if it breaks out that range, then it probably will break with high volume, because those buyers and sellers are not going to go away anywhere. The tug of war that's going between the buyers and sellers, either the sellers or the buyers will win, and then that momentum will continue, and that's exactly what happened. So as it breaks out, that's your point number 2. Oh, where's my text gone? Oh, okay. Here. Right, so that's your point number 2 now. Wait for the breakout with high volume. Now, if you don't have access to volume, then you focus on the range of the candle. So if you look at this candle, it's a pretty big candle. It's breaking out. It's not that it poked out and went back in. No, it broke out, and it's breaking two things. One, the London Open level, right? Second, it's broken this range that it was stuck in right after the London Open. It breaks the range. It comes back up, retest that level. So at this time, I'm thinking, all right, it failed, right? Because I don't want it to come back all the way. If it came back and retested this box, that would be nice. And if it goes down, I probably get in, but it goes all the way up. Then what happens? It's inside. Now I'm thinking, all right, forget it. Looks like it's going to be one of those days where DAX just goes sideways. But I'm still in my head, I'm thinking, all right, the volatility is high. Every bar is 20, 30 points. What's going on? Then it starts to go down again. Starts coming down, coming down. Now we have a new box level here. And this is where things started to change. And let me bring the other chart. See over here, I went for that immediate short. Okay, so let's talk about this one. Okay, so I'm forgetting about this. So over here, I was actually excited about taking this break. So I took the break. And because I knew that it's a risky trade, I quickly got out. So let's have a look at it. So I had a quick win here. And I have this other line from the previous lows and highs. And let me just go into that to explore. All right, if you go to the hourly chart. So you see London Open will break all of these levels to the left. So these levels to the left at that time, you know, the yesterday's low. And so this is basically the midnight low. So the overnight low and yesterday's low. Those levels were important. I wanted it to be broken as well, right? Let's go back to the M1. So that's that level. See this blue line? It actually hit that level and went up. So it was easy for me to get out of it. And then it comes down. What did I do? See over here, I've marked this level between this. So I'm looking at these levels, this level here, and then I'm looking at this level. So this level and this level, and then I'm thinking, okay, if it breaks this, these are my next levels. I'll see what it does around here. So if you look at this level, see this and these are the same, okay? So I'm watching this price. Price breaks, I'm in, reacts to it. It's difficult to hold these, right? Reacts to this same level, goes up. There you go. I have a quick small winner here again. And I'm thinking about going short here again. I have a pending order, right? This green means I had a pending order, but then I quickly deleted it thinking, all right, there's this level, and there isn't enough space between those, so I delete that. But then it gave me this pullback, and that's over here. See, so what's important about this pullback is that there was a H1 box low. Let's go there. Let me turn this into a H1 chart. Is it this one or this one? Okay. See this H1 box? Was it this one? Yeah, it was this level. All right. And it's this same level. So now the price is stuck between these levels. It's very important to do this stuff. You know, price stuck between these levels and that level and that level. And I'm thinking, all right, so volatility is high, it's broken out of the range, and I was finding these levels. If I get in here and add on here, this is going to be it. So I wrote in the chat room, I said, if price breaks this level, you know, below these levels, we're going to see something. And that's exactly what happened. So first risky entry there. And then this is the breakout entry if you enter over here. After that, watch what happens. Just trail candles. Trail candles. So I took 2 positions. So I took 2R on one and let the other one run. And this was my exit. So that's the two entries over here. One hit target point there. And the other one was trailed. So that, I think it was around, how much? It's about, yeah, 69 points here, or I think it was 64 points or something like this. So points really doesn't matter. It was a pretty good day. I was up more than 3%. When I hit my daily target, that's it. That's all that matters. It continued further down, and then it started to go up. So when the AO peaks, and when it peaks like this on a strong move, not like over here, this wasn't peaked, right? You need to see price moving as well. So price moves down, then starts to pull back, ABC pull back up there, and then starts to go down again. Doesn't break the level, right? Breaks this level, but can't break it. So I wanted to go short here, but I reminded myself and thought, okay, I can go short here, but this low hasn't broken this low, so I can't use this as a pullback. So that's why that pullback was not taken. Price goes up, it's creating sideways, and I'm thinking, all right, we might get a setup one. And we nearly got it. This could be an easy entry, but the box was big, right? Let's see what we did. See, that's that entry here. I had the pending order. I had a pending order here as well, right? That green dot. But then I thought, this box is too close. Probably not good because it moved from all the way from there to here, right? That's why we don't take big boxes. If you look at this, let's measure it. From here to the entry point, it's 42 points. So I thought, no, it's time for it to, kind of pull back. And again, it was like a strong move from here. So if it comes from here to here, it's already moved 39 points. I wasn't interested. I like tight boxes. But because this was happening and I saw this one dot, I thought, okay, I can class this as a setup one. And because the entry would be below both of these two boxes, I can go short. Volatility was high, price skipped. I had a 7 point, what is it called? Slippage. So I wasn't happy about that, but I trailed candles and I got a small winner. After that, I did my count. So there we go. So I did my count, and let me just show you that. I did my count, this one, and I shared it in the Discord room. And I thought, okay, is this 1, 2, 3, 4, 5? But my comment was, we probably have seen a complete sequence of 1, 2, 3, 4, 5, but I don't think so, because I don't see price hitting targets on 1. So maybe we still have a 5 of 5 available. And that then happened a little bit later. This created a setup 1 on the 12-second chart, I think. Oh. So this inside this move here, this was a beautiful setup 1 on the 15-second chart, the chart I have taken from TradingView, right? When I trade when volatility is very high and I want to trade the lower time frame, I go to my TradingView and I put my 15-second chart. But I can also do that on MT4. There's one of the videos available. You can see how to set up 12-second charts. Right. So I'm looking at it and I'm thinking, okay, so the move is not complete. There might be another one. I'll show you right now. And when this happens, if I drop to the 15-second chart on this, you will see that setup that I showed you, this one. You will see this here forming. Here we go, there. Creates it. There we go. So this is your entry on the setup 1. Price goes down, and now it becomes my completed wave. Why? Because it hits target zone 1. That's the fib expansion. And so if I count it from here to the peak of 4 and the peak of 3, it comes here, and that's where wave 5 terminates. And that's what makes the 10-second Elliott wave concept really, really powerful. Why? Because if I just go to real time, you will see what happened afterwards. You'll see, right? See, 1, 2, 3, 4, 5 completes, and then it starts a new sequence. And this is another setup 1 that we had a detailed discussion about in trading in our Discord today. It was a really, really fascinating one, because Aslan took it as a blind trade. He's a new trader. He took it over here, got his exit here, I think. Nice, lovely. He is 12% up today. He's been trading from Frankfurt Open. He traded this, got out, then traded this again, and I think he went long on this waltz pattern as well, He traded this over here. I think he traded this bit here, had a premature exit, and then got back in, trail candles. And Alina made quite a fantastic trade. I think it was over here. Let me just check. She took 50 points from the setup 2. So this setup 2 over here or here, she took 50 points from this. And then they took another trade over here as well. Both Esther and Elena took fantastic trades, plus 64 pips for the day. I'm also nicely in profit today. My last entry plus 64. Plus 64, come on. That is fantastic. Really great discussion today. I think for beginners or experienced traders, it was a fantastic trading lessons. So if I do some quick Elliott Wave analysis for you on this now, just to finish the video, you would see that at the beginning this would be your 3, but it turns out this is actually the wave 1. And so that's your 1. So I can count it from here. That's your 1. This is 2. And you see with wave 2 you have ABC inside it. And that's the ABC pattern. This becomes your 3. And immediately this is your bottom of your wave 4. And that becomes your wave 5. You can also argue that this is wave 1 and 2. You can also say it's this, right? You can say it's this. It wouldn't really make a difference. 1, 2, 3, 4, 5. Now, how do I know that? It's simple. I look at the candles to the left, bars to the left. This is the highest peak within this 140 candles, right? This is the highest peak. And this is the divergence. This is one peak. This is that one peak from the cross of zero line to the cross back to the zero line. This is the highest peak. And this is its divergence. So that's my wave 3. And when the first time it crosses the zero line over here, that's my wave 4. And when it peaks again towards target zone 1, see, I've hit that fib expansion. And there's a divergence, like so, between the peak of 3 and peak of 5. You have this divergence. That becomes your wave 5. And with one look, if you just look at it, you would know that this is your wave 5. And maybe 5 is not finished because it's still going up and price is still in target zone 1. So it carries on. And this is what happens in stocks. So in the beginning, market lost value, price went down. So all of the, I think majority of the 30 stocks that creates this index would have went down, which changed the mindset of the algos or whatever, or people, that it found value in those stocks and they started buying again. And there was an ECB conference and stuff going on as well, so maybe that has effect on it as well. But the ground reality is here they did not find value, or they were getting out of trades and stuff and market started going down. Over here they found value again and price went up again. So that is Elliott Wave, the quick Elliott Wave for DAX, and this would be another episode of the London report. We hit our targets today, yesterday, and the day before. So if we go to the hourly chart, you will see that Monday started with this fantastic gigantic move down. Really nice trades in there. And then Tuesday, overnight, it touched over here. And at the open, it could not break those levels. And they started buying and price went all the way up to hit those levels. The day after, which was yesterday, fantastic moves. Right at the open, it started to go down. So it hit those levels, kind of paused, went up, and then went further down. And that's it. Today was just the continuation of this move down. So really huge bearish move, which is ending with a bullish recovery. That's the story of this week. This week is done and dusted. Quite a lot of profit. So that's it. It has been a fantastic week on for us day trading the DAX. 2 days left in January. If you would like to join us, there's still a 50% discount going on, which will finish soon. In February there will be other stuff. So thank you very much for watching this video. I hope you learned something. I found value in this. And if you like the video, please hit that thumbs up and stay subscribed to the channel so you're updated every time there's a new video, and hope to see you in the next video.